Our weekly market update with Catherine up next.
Thanks, Nima. Hello, everyone, and welcome to your weekly market recap. I'm Catherine Murray. Well, markets began the session once again under some significant pressure following a 40-year high in U.S. consumer prices. The headline CPI up 8.2% year over year, with significant increases in food as well as shelter, leading the Social Security in the United States to bump up their benefits by 8.2%, trying to keep up with inflation. Medical care costs up 1% month over month, the largest since 1984. Used cars, however, in case you're in the market for one, was actually a bigger drag, down by 1%. The higher print, though, is now leading investors to price in a 100% chance that the U.S. Federal Reserve will raise rates by 75 basis points at their November meeting. Just in case you're keeping your eye on where you think interest rates are going and having to price that into your budget, as we all do. Midday, however, we are seeing the market staging a nice comeback with the Dow up by 300 points, the TSX up by about 1.6%. No real explanation for the reversal here, but there is speculation that UK Prime Minister Truss's government will tweak their controversial fiscal plan, and that seems to be acting as a bit of a tailwind for the broader markets. Still, most investors not convinced that the U.S. Federal Reserve will pivot or prevent themselves from tightening further. And that, of course, has been a big drag on all assets. Front and center, of course, will be earnings results. Big kickoff tomorrow with the U.S. banks, Citi, JP Morgan, as well as Morgan Stanley, all reporting third quarter results tomorrow. There is expectation that net interest margin as well as loan growth will be solid, including also asset quality believed to be elevated. Investment banking, though, expected to be a little bit on the weaker side. Bottom line, though, investors are fearful that we will see company management's lower guidance, as well as also talk negatively or cautiously about future demand. Having said that, recent negative updates from FedEx, Nike, as well as CarMax may have lowered the bar for this earnings season. Nonetheless, watch for comments on margin pressure, excess inventory, as well as lower demand. Speaking of demand, we do have the IEA cutting their 2023 oil demand growth forecast and warned that the OPEC plus supply cuts announced last week could lead to a global recession. We're also, of course, keeping our eyes on what's happening in China, with COVID cases rising to the levels seen last July, leading to further restrictions, particularly in Shanghai. Recall that China's zero COVID policy has had an adverse effect on global growth. Away from that, we're keeping our eyes on stocks, semi-stocks in particular. TSM did beat and raise their guidance, but also cut CapEx on supply chain constraints and weaker 7-nanometer demand forecasts. Stock, nonetheless, is up by about 8%. AMAT in the semiconductor space as well cut their guidance on China export restrictions. On the consumer REIT front, which is always interesting to me, Delta guided their earnings more than 40% higher than where the street analysts were anticipating. That's on higher consumer spending and also a rebound in corporate spending. That stock, Delta, up by more than 5%. Walgreens also had some nice earnings results. In terms of looking for stocks that analysts are getting more positive on, an upgrade on Colgate from JP Morgan. They said that this is one of the few companies that are able to keep their pricing power while cost pressures are starting to alleviate. We also have Comcast upgraded to buy over at Citi, citing valuation and also an opportunity to improve their asset mix. On the Canadian market front, more discussion regarding a recession in Canada from the IMF. They have 1.5% growth in 2023. That's down from 3.3% in 2022. RBC now sees a recession happening in Canada sooner than previously forecast, and the unemployment rate hitting 7% in 2023. UBS is actually ranking Toronto as the world's bubbliest housing market. In terms of what to watch for, CPI will be released on October the 19th, so next week. And in terms of this week, we have manufacturing and wholesale sales, as well as Korea housing national sales numbers out tomorrow morning. And in terms of stocks to watch, Aritzia, that stock is up by about 5% following a very strong earnings result. BCE has been upgraded by TD to a buy. That stock up by about 3% with a share price, target price, I should say, of $66. Obviously, a lot going on in the market right now in terms of concerns regarding inflation, the Fed over tightening, The Bank of Canada likely to follow. Perhaps we'll get deeper recessions. Please do watch my interview with David Rosenberg, who is a Wall Street and Bay Street veteran. I pre-taped it today. It will air on Sunday on my show, The Buck Stops Here with Catherine Murray. A lot of detail in terms of his thoughts, in terms of where we go from here. I really encourage you to watch it. A lot of great information from David Rosenberg.